Hey everybody, how's it going? It's Hartaj Singh again with the Biotech Capital Compass. It's another beginning of the week. It's March 31st. It's a Monday. It's the end of the first quarter, and the markets whipsawed again today. Biotech had a rough day. So we had just published a quick synopsis of our thoughts on the industry using the IBB and the XBI ETFs as a proxy, and we had just published that recently. So this is just a video sort of takeaway highlighting what are the takeaways from that note that we wrote, which has a lot more data in it. So this is maybe just for a little bit more fun, people who just want to listen or just want to look and listen, or maybe just hear it over their phone or their car while they're driving. So what's going on with biotech? It's a boom, bust, or a bounce back. The bees. Well, welcome back. Today we're diving into the world of biotech investing, where science meets Wall Street. And lately things have been just a little bumpy in biotech, to say the least. The ETFs have been dropping. IBB, XBI, the various other indices that they seek to mimic also, have been under a lot of pressure over the last few days to a couple of weeks. So let's just talk about how we got here, what I call the biotech backdrop. Biotech stocks had a wild run during the pandemic. Everyone was chasing mRNA, gene editing, and the next miracle drug. But lately, not so much. The sector has been under some pretty serious pressure. The NASDAQ Biotechnology Index, or the NBI, which tracks the big players, has seen profitability fall off a cliff since 2022. We're talking negative profit margins and return on equity. Translation, a lot of these companies are burning more cash than they're making, and investors have noticed. Just remember, the NBI index is the biotech sector, about 200 to 250 companies all rolled up. It's got a lot of small companies that are cash burning, small to mid cap, and a few larger companies that make money, but it has, since 2022, fallen into negative profitability zone as a sector. So let's talk about, big versus small, the great biotech divide. Not all biotech is created equal here. There are two main ETFs, the IBB, which tracks big, more stable companies, and the XBI, which focuses on smaller, scrappier players. And guess what? The small caps are struggling. Like a losing membership in the index, kind of struggling. In 2021, there were nearly 200 companies in the XBI index, now closer to 120. That's a pretty significant drawdown. We have seen it before. We published on this before. This historically happened before in 2008, 2009, which actually led to the sector performing well starting in about 2010. But again, that's a talk for another day. But right now, bankruptcies, delistings, mergers, you name it, it's the survival of the fittest out there in small cap biotech land. Let's talk about the sentiment whiplash. You know how people say, follow the money? Well, biotech investors have been doing that and then yanking their money right back out. I mean, that's literally been the case with these ETFs. Over the last 6 months, we've seen huge swings in ETF flows, hundreds of millions flowing in 1 week, then out the next. It's like investors can't decide if biotech is a treasure chest or a money pit. Even the news headlines are mostly about these flows, not breakthrough drugs or FDA approvals. That says a lot. So that's really in the last 6 months. We've seen more news flow on fund of flows, within the XBI than really about on the smaller caps than really about breakthrough drugs or FDA approvals, which is not a good sign, especially on the small to mid cap side. But, there is kind of hope, big caveat there. Here's where it gets a little interesting. Projections for 2025 are actually looking pretty decent. Analysts expect profit margin return on equity rebounds significantly. This for the overall biotech sector, as typified by the NBI index. There's a sign that some companies, especially the big ones, might be turning the corner. If that happens, investor confidence could return and we might see biotech back in the spotlight. But it's still a show me story. The science is cool, the potential is huge, but the execution, still a mixed bag. In fact, that's what I consistently hear from investors, even folks on the retail side, institutional side. Everybody wants to know, is biotech capable on executing, and less so about the dream. We all know about the dream now about biotech. It's really about executing a lot of management says that they're going to deliver to us. So what should we take away from all of this? If you're watching biotech stocks or holding some in your portfolio, here are three things to remember. Large cap is where the safety lies. That's IBB territory. Small cap is risky, but potentially rewarding. XBI is like biotech's Wild West right now. And watch the fundamentals, not just the hype. Sentiment can flip fast, but profitability is what actually lasts. So again, biotech might be bruised. It's not broken. Keep your eyes on the science, the earnings, and maybe, just maybe, the bounce back. I do believe we are getting there closer than we were a few months ago, because a lot of the fundamentals, the consolidation is actually hopefully coming to an end in the next few months or a few quarters. So again, don't forget to like and subscribe on our newsletter for more market insights. See you next time. Have a good day wherever you're at. We hope to make biotech something of value to you in the future. Take care.